Bloomberg Audio Studios. Podcasts, radio, news.
The single best idea. And just today was a great day. Equity. Lisa Shallot was on fire with a hugely aggressive note from Morgan Stanley that, like, you know what? Things are pretty good. Get on board. A headline out this morning, NVIDIA committing to invest up to $10 billion in Anthropic. I don't know what to do with all this, but we're really listening to some of these year-end summaries as they go to their outlooks. People like Lisa Shallot at Morgan Stanley. Stuart Kaiser on fire this morning with Citigroup, much more in the trenches, the dynamics of the market. Stuart Kaiser on the moment at hand.
Yeah, I think for NVIDIA, you're paying for the forward growth outlook. For Walmart, you're almost paying for execution. Yep. Like, these guys just have been masters at executing their supply chain, their inventory management. You now have, what were previously middle-income spenders kind of trading down into Walmart stores. So that's why Walmart's so important this week, because they are so good at execution. They are such a good lens into the broad-based U.S. consumer that if they echo what we've heard from Home Depot, from Costco, from Chipotle, from O'Reilly Automotive, if they echo that, I don't think the market's going to take it well. Of all the new information we've gotten in the last month, to me, the weaker consumer earnings is probably the newest and the most concerning of all that information.
Stuart Kaiser, let me explain this. On the Bloomberg DES screen, the description screen, world famous. I mean, to me, the YA screen, the yield analysis screen, was what made Bloomberg. But the DES screen's an important effort as well. Many screens of a description of a given company. We report two price earnings ratios, the present one looking back 12 months, and then we do a calculation of the expected PE looking at different algorithms in that. NVIDIA is growing like crazy, so their present PE is 50-ish, and their expected PE is 40-ish. Walmart is ginormous, we know that. Its present PE is 40-ish, and its future PE is 40-ish. So there's a big, big distinction wrapped around those hyperscalers, those tech moment, and their growth as well. Over in bonds, I've never seen this, folks. I'm saying this in umpteen decades. I have never seen a more optimistic note on fixed income than what I saw from Tony Crescenzi today at PIMCO. Tony Crescenzi, I'm being brave in fixed income.
5 to 7% is quite attractive for AA minus. AA minus, according to Standard & Poor's and Moody's, indicates you have a 99.98% chance of getting your money back. Now, if you believe that those yields are unattractive, you're thinking then that that's because the Federal Reserve will fail. It will fail in its efforts on price stability. It may continue to fail in its efforts to achieve its 2% price target, sure, but that doesn't matter historically. What matters historically, you can go back to the Greenspan Volcker days, former Fed chairs, price stability is what matters. Somewhere in the mid-twos is what defines it. We have all kinds of data that show that. Markets are happy when prices are simply around stable in a relatively low zone, call it 2.3, 4, 5, 6.
Tony Crescenzi of PIMCO. We're on podcasts. We're on Apple. We're on Spotify. On YouTube podcasts. It's Single Best Idea.